Yet another Saturday evening for all our masterclass participants. Good evening once again. We're on the 1st of June, 5:01 p.m. as every Saturday. It was the end of the month, so I have kept the monthly, weekly, and the daily 3 time frames. We're going to spend some good time at the beginning of today's session and take a look at the Nifty, the broader markets, and definitely the sectoral indices. The monthly chart is going to play an important role. Next, after that, we'll quickly update our sheet, the open positions, the open opportunities that we had identified, how they're doing, good, bad, what should be our stance for next week. Then I'll definitely take up your doubts and questions, and if we come out with any good opportunity for the next week. So first thing first is always the Nifty. We are looking at the monthly, weekly, daily combination once again. Monthly looks fine, trend and momentum wise looks okay. It's going through a nice series of positive average monthly closes. I hope you remember I use Heikin-Ashi candles, which are nothing but average closing prices, open, high, low, close divided by 4. So monthly is all right. It's slowing down a little bit. Monthly charts definitely reflecting that. But no sign of, no evidence of any kind of a top up or any kind of a serious top. There's no divergence or there's no kind of loss of momentum per se. So okayish, bullish chart, the monthly. However, if we come and take a look at the weekly, what we have been going through, if you of course remember, is a slant divergence kind of a behavior when we see prices improving and momentum losing its ground. And these kind of situation scenarios do lead to a choppy market. And yes, we are in one hell of a choppy market for quite some time now. So weekly signs of momentum slowdown, it's not getting reflected in the trend. So cautiously bullish is the term that we should use. Bullish because of the direction, the price, and cautious because of the lack of momentum. Now, if we come to the daily time frame, which is the third chart, if you remember in our masterclass weekly classes, we had drawn this zone, which essentially was a zone of resistance of the past. And a principle of polarity, if it holds, then this range should have held this fall and the market should have stayed above it. Now that has not happened. The markets have nicely broken below that, and so far till Friday's close have stayed below that. These are all average prices. I'm using Heikin-Ashi. Now this is prima facie not a very good sign. It's not a very positive sign from the daily chart. The index has slipped back within that zone within which we were seesawing all this while. Momentum was improving, was coming down, was improving, was coming down. So it's been like a crazy ride, and it seems like we are going towards the zone. We are at the zone and we are going towards the mid of that zone now. I'll reiterate, this is not a very good sign. We have exit polls picking up today evening. Sunday, we will digest a lot of exit polls and we'll have some kind of a mental state with which we will open on Monday. So a lot of movement may happen on Monday, and Tuesday comes the final results. So it will not be wrong to say that we should buckle up for the next couple of trading sessions. And I have been particularly suggesting stay light as much as possible. Stay hedged, or you can transfer your directional positions to options. Important from pure price point of view, if I keep aside any kind of external events or news or triggers, let's consider that it's just a normal market situation. Then the important point from the price point of view is, I would say 22,800 kind of level. It needs to scale back. It needs to prove us that, well, this was a retracement of the big run up that I gave, and now I'm en route the next move. Then we should be heading towards easily 24, 25K, not a problem. But a failure to scale back increases. The more time it spends down here, the more probability that it's going to drag itself down further. That is, this weekly momentum is still intact. It's not going to be easy to kind of pick the tail of the direction of the index, especially of the Nifty. How have been the broader markets playing out? So cautiously bullish Nifty, all right. 500, CNX 500, broader markets, pretty good. Similar kind of a reading on the weekly. Now this guy is still holding good. If you can see, the broader markets are still holding good. The principle of polarity is playing out here. This is a relatively much bullish chart than what we saw in Nifty. So broader market still all right. Let's take a look at the mid cap. Mid cap 500 on the monthly, again pretty clean as of now. The Heikin-Ashi is also improved. Weekly was going through that momentum slant, but price direction was so strong, it is now trying to pick up. It's okay. There are very, very early signs of probable divergence, but this is way too early to comment on that. The evidences which is there right in front of us, mid cap is also looking all right. As of now, it looks more like a throwback, a retest of the highs. Highs are trying to act as lows. If this happens, the market should go up as of now. And then the small cap. All right, monthly is pretty fine. Weekly seems to be stuck. It's not made an all-time high in the recent move, which the Nifty has managed, the CNX 500 and mid cap. Small cap is showing a bit of relative underperformance over the last, I would say, couple of weeks. So the chart is not particularly weak, but not as good as mid cap. So I would say for the Nifty and the broader market, let's stick to cautiously bullish view. What about the bearish side before I go to the sectoral indices? So from the bearish point of view, as I said, especially for the Nifty, a failure to scale above 22,800 will be the first sign. And any kind of a fall below Friday's low, if Monday we see a fall below Friday's low, then the possibility, yes, will be there. So what can be the downsides? The downsides will not be very difficult to mark, 22,200. In fact, further down, if we get any kind of a negative surprise from the event, just remember we have an event coming up. So levels will get compromised for a very small span of time. Now let's come to the sectoral indices and let me sort them in terms of gainers to losers on as per Friday's trade. Starting with reality, exceptional chart on the monthly and pretty exceptional move from the price also on the weekly. Daily had given a breakout and holding fine. I had some bit of a weakness in DLF, but the others were doing fine. So again, bullish. The momentum is improving on the weekly. It's not like a table thumping bullish chart, but yes, it's a bullish chart as of now. As long as there's no evidence of bearishness, it makes sense to stay with bullishness. Same with metals, pretty strong across the 3 time frames chart. One of the strongest actually across all 3 time frames. Metals probably is the strongest at this juncture. PSU Bank is suffering from that slant, which is causing this particular oscillation. It's bullish. It's predominantly bullish. Let's use cautiously bullish because of this behavior. It had a great time. So it's about, somewhere in terms of time and price, it will face some resistances which will give it some meaningful correction. If I see that the CNX PSU bank index over the last many months now, since October 20, it's been almost 4 years, almost approaching 4 years. It's not given any meaningful retracement. That's a good sign, as well as the sign that some kind of a complex correction will come in the near future. Energy monthly chart is fine. Heikin-Ashi bodies are shrinking, which is reflected over here in terms of the momentum divergences. Now this is an interesting chart. This is a slightly interesting chart because what we can see over here is a breakout, this breakout. And then what we can see immediately after that is the breakout failure. And we can consider this as an Heikin-Ashi pullback. Means the breakout failure, right? So from the weekly point of view, if the index slips below last week's low, and we see some weakness in the OMCs, we saw that in stocks like IOC and all, and Reliance also trying, ONGC and others. So if you see weakness in this energy pack, which will be defined, what is the definition of weakness in CNX energy? A slip below last week's low. What is the confirmation of this weakness? A slip below last week's low and a close below last week's low, which we will get to know next Friday. Next Saturday we will discuss this. Then this guy is headed for some downside. So the first sector that we stumbled upon, which is showing us evidences of a prospective downside, is CNX energy. Our next step should be to take a look at the CNX energy stocks, which is there in our TradingView watch list. Check them one by one and try and figure out, especially amongst the heavyweights, which are the one which can lead to this. Let's understand something. We are trying to read the charts. We are trying to collect evidences. We got some evidence, which is a breakout failure. Is it a fact? Yes, breakout failure is a fact. What can happen after a breakout failure? If it's a successful breakout failure, we should see follow through downsides. And what can be the extent of the downside? It can be anything, but there can be downsides. So we've got some anticipation. If this breakout failure is not a failure, like a failure of a breakout failure, then of course it has to go way above last week's high, which means till then we might continue to see oscillation. So directional anticipation energy on the downside based on the breakout failure. Come to consumer durables, very, very pretty looking monthly chart. Upside choppy behavior. See this? It has gone up, but it's not gone up like this. It's gone up and 4 week, a month of correction, 3 week of correction, a week of correction, week of correction. So it's been choppy and this is how it has behaved. Not easy for short-term momentum traders because the retracements, they were pretty steep also. View, I would say bullish. I would definitely stay with the trend and the momentum and stay bullish. But bullish does not necessarily mean that you will have to buy at the current price. Going by the current recent behavior of the chart, consumer durables, it had always made sense to wait for deeper retracements. And the definition of a deeper retracement, you can use a short-term RSI and wait for it to drop below the 20 level. A short-term RSI is a 2-period, 3-period RSI. So in this juncture, at this juncture, consumer durables on the daily chart is below RSI 20. So those who trade lower time frames than daily can look for a reversal on the consumer durables. Bank Nifty and CNX Finance, the two most important sectors. Now this monthly drawing is essentially on the weekly time frame. This one, which is a beautiful looking rising wedge. Changing this chart to monthly, and we will find a pretty decent looking monthly chart, which shows the direction and the trend more or less in favor. Not much of a strong evidence on the downside. Weekly also okay. It's just gone through crazy oscillations, breakouts, steep retracements. I like to use the word drama when I see charts full of this. And I think one big culprit of this behavior is one of my favorite charts, which I love to trade, but of late it has been behaving really like a drama queen, is ICICI Bank. So yeah, so we have to deal with it. There were pockets of falls, good falls. There were pockets of bounce backs, Axis Bank especially, HDFC Bank also trying its best. So bullish. Let's go with the trend. Let's go with the underlying momentum. Let's create the view bullish, but we know it's not going to be an easy ride. But predominantly bullish. Similar kind of a reading we will get for CNX Finance, Private Bank. Now, Private Bank, it'll be interesting. It'll be interesting to see, because whenever I see a rising wedge in a rising market, which is kind of there in the weekly chart, you see what I'm trying to say is this high in terms of time was away from the previous high. The time is reducing, the time is reducing, the time is reducing. So every successive highs is getting made in a much more smaller span of time. Sign of slowdown, sign of a fact that the market seems to be losing its underlying strength, momentum, whatever we call it. And in terms of trend lines and all, you can draw something like this, you can draw and leave it. So this is holding the index up. Predominantly bullish, but again, we need to deal with it accordingly. Auto. Now, this will look like a beautiful monthly chart. Where it is. I didn't actually expect that this breakout will lead to almost a doubler. Almost. This was close to that 13K breakout and we had almost touched 24K. So this was phenomenal actually. After this kind of a consolidation, it was phenomenal. Pretty strong, okayish, losing a bit of grounds. I have tried a couple of times to short few auto stocks, were not very successful. And there are not any strong signs of slowdown either. So stay bullish, but staying bullish does not necessarily mean it's time to buy. It's always good to wait for a drop. FMCG. Now, FMCG monthly chart is buying some time and choppy. FMCG's momentum is slipping on the monthly chart. Weekly is improving, daily is again slipping. So we have a conflict across the three different time frames. Always respect the highest time frame, which means that the monthly's momentum is still down, which means the weekly oscillation, weekly volatility is likely to continue. We cannot expect a beautiful steady rally on the upside or a beautiful steady fall on the downside. It's not going to happen. Just like the market view. Daily the trend and the momentum on the daily time frame has reversed. So any kind of a pullback from here on is actually going to be a shorting opportunity. So FMCG not that bullish. Coming down to the last two sectors of pharma and IT, starting with pharma. Remember we had marked these things, the slant divergences. For some reason it is synced across all the charts. So we're talking about this range bound activity. It's just buying some time on the monthly chart. Monthly chart seems to be fine. Daily chart has never actually given a successful breakout on the upside or a successful breakout on the downside. Successful breakouts, by that I mean that the price breaks below that zone, gives a pullback and opens up equally, if not more. So whatever was the fall in the first leg, the second leg will fall the same amount in terms of price, if not more, because successive legs tends to be longer. So it's been I think divided pack, wherein a couple of stocks have done really good on the upside, couple of stocks have done really bad on the downside. They have trended on either direction. So a trader will not be able to kind of create a strong sectoral view. It's been more of a stock specific behavior. If I kind of macro manage or macro analyze the weekly chart, I would say last week's low is going to be important over here. Also, pharma, if it slips below last week's low and stays below last week's low from the weakish point of view, and from the bullish point of view, again, I would say last week's high and you need to stay above it. If you notice the pharma weekly chart for the last few weeks, you'll notice that every time it has managed to kind of break beyond a proper resistance, it just gone up and slipped. Same thing it has happened on the downside. So we have decided, if you remember, we had kind of decided that please let's stay away from pharma, and I think it has worked in our favor so far. And coming to the last sector, which is IT. Now a lot is expected out of the sector, of this particular sector. Now on the weekly charts, you will definitely recall this. You will definitely recall the trend line in terms of time and price, not a bad zone to bounce back and all that logic. Monthly chart seems to be okayish, and we did get a bounce back. This is the daily chart bounce back, wherein the second tier stocks like Coforge and Persistent, etc. did much better. I was expecting the leadership to come from especially TCS, Infosys, HCL Tech, but none of them performed. Especially TCS underperformed, and this weakness is primarily because of that. Now it's a big outside bar on the weekly chart. By outside bar, I mean it has made a higher high and a lower low. So it has made a higher high, bullishness. It has made a lower low, bearishness, and making the lower low. While making the lower low, it has kind of broken below all these levels. All these levels have been broken. So typical breakdown, breakout, technical, conventional technical analysis will say this is big time negative and bearish. Yes, I agree. If it stays below this, then definitely yes. But for whatever reason, next week, if you see the index bouncing back like this and going above these levels, CNX IT, then brace yourself for some serious good upsides. This was just a trailer. So again, in terms of time and price, not bad. It's taking its own sweet time. But yes, structurally it's negative. We're trying to do kind of a bottom picking, fishing, contra kind of behavior on the sector. We'll see whether this turns out to be a breakdown failure or not. Trust me, once you identify a good breakout failure on the upside or on the downside, a lot of odds are actually in your favor if you catch a good breakout failure, because it trends really well in the opposite direction. So two main things that stands out from our weekly analysis now today. One, the prospective breakdown failure of CNX IT. The prospective breakout failure of the CNX Energy. These are the two main sectors wherein we can expect, if the breakouts turn out to be failure. In these two sectors, CNX Energy stands out better. Why? Because it has already confirmed a breakout failure. So the prospect of getting some shorts from this pack is much higher. IT probably will need some time. Rest, majority of the sectors were bullish / cautiously bullish. You would have got this by now that this market is more stock specific. I would not even say sector specific, but stock specific. And that specific stock is also behaving or misbehaving for a very, very small span of time, maybe a week or so. So let that be our strategy for the next week also. Monday, Tuesday, we of course might face some more than normal range expansion, volatility. It's better, this is once in 5 years, it's better to stay light, don't do much, don't even try to make a lot of money just out of this event. If you're an event trader, then that should be your strategy. We are not. We tend to trade the rest of the year and rest of the months also. So we'll wait out and let this pass. Once the range settles down, we'll get back to our normal grind of finding opportunities. Right? Okay, so that's my sectoral and market analysis. Now let's quickly move on and update the sheet first, and then I'll take your doubts and questions.